This week, traders are navigating a market driven by policy signals and geopolitical risk. Let's get into it. We kick off Monday with the US ISM Services PMI, a key pulse check on the US economy's largest sector. A strong reading could reinforce the higher-for-longer narrative from the Fed. That would likely support the US dollar, putting pressure on euro-dollar and pound-dollar, and potentially weigh on equities, especially rate-sensitive sectors. Moving on to Wednesday, it brings the Fed minutes, and this is where volatility could spike. New Fed Chair Kevin Warsh is keeping his cards close to his chest, and not much is shared regarding forward guidance. So investors will be eyeing the FOMC minutes of the June meeting for any clues as to when a rate hike may be delivered. A hawkish tone emphasizing inflation risks could send the dollar higher and knock back equities and crypto. Cryptos are particularly sensitive to liquidity shifts, so a hawkish Fed could further weigh on Bitcoin, which is hovering around the 60,000 area. Also on Wednesday, we have the Reserve Bank of New Zealand rate decision. The RBNZ has been one of the more aggressive inflation fighters. A hawkish hold or hike would support Kiwi strength. Thursday brings the ECB minutes, crucial for euro traders. If the minutes reveal inflation concerns dominating, that could rise ECB hike bets and offer the euro support. Friday's Canadian jobs data is a major driver for the Canadian dollar. Strong employment would offer support to the Loonie, which has fallen victim to the drop in oil prices, given Canada's export profile. And speaking of oil, we saw oil prices come close to their pre-war levels as the US and Iran continue to discuss the details of the peace deal. However, things appear fragile, and any renewed tension or even escalation in the conflict could send oil prices higher again. It's interesting that gold hasn't been able to gain much on the geopolitical unrest, succumbing to a stronger dollar, increasing Fed rate hike bets, and the shifting inflation outlook. Bottom line, expect volatility driven by central bank signals and geopolitical headlines, and watch the data for direction. This was your Week Ahead Roadmap on XM. Give us a like and subscribe. You don't want to miss a market update.